Hi everyone and welcome to the next episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan. On today's show, it's me talking to you today, solo again, about one number. And in this particular show, I just wanted to talk to you about a client success story from a few years ago, but it was because the client got obsessed about one particular number. I think quite often you hear this idea that you should be closer to your numbers, but what does that actually mean? And I think sometimes it can be quite overwhelming. You're just like, well, how do I even start that journey? So in this episode of the podcast, I want to talk to you about this story because the client just needed one number. One number changed this business. They went from £16,000 loss, give or take, to £155,000 profit in the following year by just concentrating on one number and one number alone. So let's get into it. So as business accountants, we have a meeting with our clients each year as a minimum where we look at the accounts and hopefully if they've got accounting software, which the majority of our clients will have, if they're limited companies, actually all but about two, I think, will have. And we'll sit and we can dig into real detail in it. And what we're able to do for some of them, depending on what they're doing with this, is we're able to look at, well, what happened with your numbers and how are you doing against the industry average? So in this particular client's case, they were doing really badly. They were actually weirdly doing well at the top ends. They were selling stuff. So it's a reasonable business. It was about £870,000 worth of turnover in that first year. So you'd think that's a pretty reasonable business. But quite often turnover kind of masks the size of the business. And I want to get into your head straight away, this is a small business. You're talking probably about 4 people at the time, maybe a couple of extra subcontractors. And as always, because it's a true client story, I'm going to move the numbers around slightly and move some of the facts around to make sure that the client's identity is protected, but it is genuinely the nuts and bolts of the story is a genuine story that actually happened. What I want to do in this show is kind of just talk to you about what they did so that you can do it too. And as we go through it, I'm also going to explain to you things where I think you can go and do this without an accountant. I think it's better with an accountant, quite obviously and quite biasly, but there's absolutely, you can do this. So there are tips in here for you to go away and do it. So as we said, one number is quite important. So what the member of our team picked up is we looked at it and said, right, your gross profit is a problem for you. Now, if you've never heard of gross profit before, what I want you to picture is if you imagine you've got your sales at the top. So you know that figure, everyone knows that figure. And then the cost of delivery is kind of the next bit. So this was a business in the construction industry. So if you imagine theirs was mainly subcontractors, labour, direct wages from the people they were paying, and then materials. So I said to you sometimes in the construction industry, turnover's inflated. And the reason it's inflated is if you imagine if they went to go and do somebody's extension, they're going to pay maybe 40,000 in materials just for the bricks and things to build it. That's going straight on. They're invoicing that. They're recharging the customer. So that top figure can look quite big, even though actually that's not really their money. They might make some money on the materials. In fact, in construction, normally they do make a bit of money on materials. But after they'd paid everything, what they were left with was not actually as much money as the sector says should be left. And the way we know that is because we calculate something called the gross profit margin. Now, the way you calculate that is you take this gross profit figure. So you got your sales. And again, this is a podcast medium, so apologies for trying to explain this. If you do want to see me talk about this in more detail, obviously you can watch this podcast on the podcast YouTube channel at the HeelanHub, but there's also our main channel at Heelan Associates. I've done a video similar. I think we've entitled it something along the lines of, obsessing about one number can change a business owner's life or something along those lines. And I'll actually show you in that video examples of the profit and loss and all the things we're going to talk about here. So if you're struggling to picture or you just want to recap on some of the things I'm talking about, that's a good one to go to. But hopefully I can explain it well enough for you. So if you imagine you've got your sales, then you deduct all of those costs, which in this instance was the labour and the materials and the cost of delivery. In your business, it could be something like if you sold, clothing, it might be the actual clothes that you bought from the factory and then the postage and the courier, that kind of stuff. What's left is your gross profit. Now, all you do is you take that gross profit figure and you divide it by the sales figure and then times it by 100. And that gives you a percentage. And in this client's case, the percentage was just 14%. Now, in some businesses and some sectors, 14% is pretty good. Actually, if you go to, say, car sales or something like that, that's actually very good. So depending on what cars you're doing and what you've put in there. But anyway, other sectors can be, that can be a good margin. And actually, you look at some people who sell on Amazon, for example, some of them only make 9 or 10%. So it can be that 14% in some sectors is good. However, our data and our work in the construction industry, and we do a lot in the construction industry, said for their particular kind of subsection, and I'm keeping it anonymized for now, but their kind of subsection of the industry was about 30%. In fact, we'd seen some 35% margins in that particular sector. So 14 versus 35 to us there's a problem, or there's certainly room for improvement. Now, what we worked out is if they just improved it by even 2 and a bit %, they would have ended up in a break-even point. Because if you imagine they just lost 16 grand, you think of all the hard hours done and all the weekends lost, the time with the family lost. It wasn't a surprise that the actual owner in this case was thinking, well, do I even want to carry on with this business? This is a lot of work. And then there's managing the lads and getting them on site and all the other stuff that goes with it. And of course, nothing's ever smooth, is it? Doesn't matter what business you're in, there's always problems on site or problems with customers or whatever the case may be. So you go through all this thing to lose money. And what ends up happening is it's not like you just die and not you physically, but the company just dies and falls over, because at 800 odd grand, you've got turnover, you've got money coming in all the time. So what happens is your tax bill gets unpaid, your suppliers' payments go late, those kind of things. But eventually what happens is the business would fall over. And we see this time and time again in construction. That's normally what happens. When it goes bad, the tax bills just climb. The director ends up owing the company money, and it's just a horrendous end to the world when it happens. So we wanted to avoid that. So what we're trying to talk to the client about was saying, well, look, we know that this could be better. This isn't actually something that necessarily is like a market force. This is this is within your control to a degree. Now, when it comes to changing gross profit and improving it, there are several things you can do. Actually, there's lots of things you can do, but really they come back down to 3 or 4 main things. The first one is, can you change the price at which you charge? Obviously, just increasing price generally is going to help. Or can you reduce your costs? So can you pay less for materials? Can you pay the lads less? Those kind of the 2 obvious ones. And then I think when you look at the other one is, can you sell more? Can you sell more is the other obvious answer, because if you sell more at the top end, you're going to make more gross profit. But I think the magic is often in a combination of the few. So if you can increase price and you can reduce cost and you can become, say, more efficient. So maybe in this example, the lads do more jobs. They could take on more jobs and manage it because they get really efficient. Now, what the actual client did was a combination of all of these things, and it made a big difference. But the first thing we were looking at it and said, well, look, what do you think the percentage increase could be? And he goes, maybe I could make 5%. Okay, 5%, that's cool. Because if we could get it towards 20%, you could add 50 odd grand's worth of profit straight to the bottom line. Because if you imagine the way gross profit works is that we haven't paid any of your overheads at the moment. So if you've got sales at the top, the cost of delivery, and then the gross profit, underneath that, what we have is overheads. So telephone, accountancy, rent, all those kind of other things that are down there. So if your gross profit is not high enough, you can't pay for the business to work. And that happens so often. If I think about bricks and mortar stores, say you got a coffee shop, I use this example all the time because I've seen so many of them be disastrous, is what happens is you're making money at the top, but you don't make enough. You don't sell enough coffees, enough bacon sarnies to pay for the rent and the overheads and ultimately the owner's wages. So there's a good example. So you need this gross profit. It's so important and so often the most magical figure where you make the most impact. But sometimes it can be hard to turn it around and move those numbers, because it's always easy to say, we'll just increase price. But we all know that can be a challenge. However, that is where the client started. So he thought, do you know what? You've given me confidence. And it's a bit different to reading it on the internet. If your accountant's telling you, look, we work with X amount of other businesses just like yours, and they're doing nearly double what you're doing or more than double what you're doing in terms of gross profit, you absolutely probably have a problem where you're just not charging enough money. So what he did was he went back to his salesman in the office and said, look, we're not now going to do any job for less than X. And the salesman was, as salesmen do, there's no way we're going to be able to sell anybody. Everybody's going to leave. We're never going to have any clients. We're going out of business. But the owner realised the same thing that we'd said, which is, what's the worst that can happen? You're going to get out of business anyway. Something has to change. So he went back and he said, no, we're doing it. We're going to go and charge these higher prices and we're going to make sure that works. But while we're doing that, we're also going to tackle the cost issue. So he felt that as they've sort of grown, that things were getting a little bit out of control. And this is very common in businesses as they grow. Actually, this margin figure tends to shrink as you get bigger because inefficiencies creep in and people just aren't as efficient as you were when you were smaller. It's just the way it tends to play out. Time and time again, this happens. And what he did was he went, actually, I think it was on like Fiverr or a freelancer site, and he got a spreadsheet made really cheap to track each job. So he would have somebody in the office, I think it was his wife actually at this point, put in what was being spent on each job. And what he found is there was a load of wastage in there. So the lads were, for example, going to a more expensive supplier because it was easier for them and they just preferred it. It was closer, or they were buying more materials, but the other guy in the other van had materials, but it was just easier, just rather than just meet up and trade materials. So there's a lot of wastage going on, and he actually managed to reduce his costs just by a small, I suppose, guidelines. But in a small business, in a trade business, it's probably not like a document. It's probably just a word in the ear and say, look, can we just do this? But he really did make a difference there. And he did start to increase prices. And some jobs he didn't get, but when he did get them, they were far more profitable and actually helped him grow. Now, in combination with that, he was trying to grow, so he was networking, he was doing a good job and getting more jobs as well. So he managed to increase all three of those points. And that is where the magic is. Now, fast forward a year on. Now, with this particular client, we actually could see this happening throughout the year because we had a service where we were more proactive than that, and he was paying us to do sort of quarterly updates and things like this. So we could see it was going well, but sometimes, particularly with a business this size, you have to take into account the work that's not done. And this one's a bit technical to explain, but if you imagine, if you're paying the lads every week, but you haven't invoiced yet, sometimes there's a big balloon payment at the end, and you've got to factor that into the accounts if you're trying to get some like real accuracy from the figures and look at what the real picture is. If you picture, say, in a product business, this would be a good example. Say you were selling clothes. If you've just done a big pre-sale and you've got 50 grand's worth of sales in, but you've not bought the stock yet, if you pulled off a report, it would show you making 100% money because you've not got any costs in. So matching those things is really, really important. So as the year went on, there was always a question about where we were. But when we got to the year end, we made sure we had a big effort, and as there has to be, to make sure those accounts were accurate and that all the timing was adjusted. And we had long conversations about this because he obviously was at 14% gross profit, but he ended up at 31%, which is ridiculous. Sometimes, and particularly I find as businesses grow, it's harder to make these differences. So, for example, if we were trying to change our gross profit by even 1%, 2%, that's quite a mission at our sort of size and our sector. But the smaller, more nimble you are, and depending on your sector, you can make these big changes. But in construction, you very rarely see that kind of change. So this is an outlier, but he just concentrated on these things. When we talked to him about it afterwards, we said to him, well, what made the difference? He just said, I think half the time it's just the confidence of knowing that other people do it. Other people do it. We can do it too. And having that confidence and went away was a big thing for him. So amazing result. And this isn't as well, like this, again, we work with some amazing construction businesses, and I would imagine their owners would tell you this. Some of them, they're not really interested in the numbers particularly. The business side of it isn't necessarily that exciting to them. They might just love what they do. So for somebody in that industry to take what one of my team said, I'd love to take credit for this one, this wasn't me, one of my team said, and he went and implemented it and did something with that data. It was just a magical day for everybody. It makes us think, do you know what? Someone's listened to what we said. And again, we've got loads of clients, of course, that listen, but generally in that sector, it can be a struggle. You've either got clients who really love it and really take it on board, or you've got clients who almost don't want to come in and meet you on that particular sector. And we do a lot of it as well. Construction's been bread and butter for us for many, many years. Is a really important sector and we love it, but that's just generalizing, that's how it goes. So that was really, really good. And as you can imagine, that changes his life effectively at home. They were able to have more money to be available to do things in the home, and go on holidays. I think holidays were their big things. They would go on holidays and celebrate. And of course, it just meant he didn't owe any tax. So that's, that peace of mind of not being chased all the time, having money in the bank was really, really, really big. Weirdly, as it grew, the next phase was, okay, we need to control the money you're taking, because unless you need it, you're causing yourself a big tax bill. Let's look at how we might restructure it to minimize this. And we put a load of things in place. But that was like a new problem, was you've got all these profits. What do we do now to keep the tax bill down and be as efficient as we can and be in control of that? Because many limited company owners will know if you start taking out really big sums, you get really big tax bills personally, and funding those later can be quite a challenge. So that was something we helped him navigate afterwards. But you can imagine that was just a really, really cool story. But the biggest thing we found, and this repeats itself time and time again, it's why I want to bring it up, is knowing what the number is and what the potential is, and then having an intent and a goal to work towards, and changing your behavior and your business's behavior and your team's behavior can have such a profound impact on the business. But what's the alternative? The alternative is you just bumble around doing the same thing you've been doing every other day, and you'll get the same results. And we see this again. Unfortunately, sometimes it's like that horse to water thing. Sometimes you can explain it to somebody, you can show them, but they're like, it's too much hard work. Nah, no one's going to buy it if I move the prices. No, I couldn't possibly reduce my costs anymore. I couldn't work any efficiently. Those kind of things. Sometimes if the the guards come down, it can be difficult to change that opinion. But if you can get the behavior changed and you can get the intent right and you've got a goal, magic things can happen in your business. If you're listening to this and thinking, yeah, my business really isn't doing as well as I hoped. In this particular instance, the owner was on the brink of just getting rid of it all and jacking it all in. But you might just be thinking, no, I'm not going to jack it in, but I am really not happy with the reward versus the effort. Actually, maybe your business is doing okay, but you're working 70 hours a week and thinking, why? I'm not rich. And maybe that's your goal. Maybe you want to be rich. If that's you, this is one number you absolutely concentrate on. So you might be thinking, well, that's cool then. So how do I do it? Well, I think there's a couple of things you can do. The first thing is you've got to find your gross profit margin. So the way you would do that, a couple of ways. If you're working with an accountant, so if you've got a limited company, you're going to have full accounts. They're the ones that you send to the tax office, not Companies House, and it will generally have a profit and loss report on it. Now, if you've got those, they're a really good one because if your accountant's good and have done their job properly, all the timing differences should be there. That's the true on-paper profit and should give you a gross profit margin. So you flick to that page, you find your sales figure, you find your gross profit figure, you put your gross profit figure in the calculator, press the divide button, put your sales figure in, equals, times it by 100, and that's your margin. So now you know that figure, you know where you're at now, you can think about, well, okay, what happens if I improve it? And the cool thing about gross profit margin is what it tells you is if you look at the sales figure and you times it by that percentage, it'll tell you what gross profit you would make. So if you imagine, it's really giving you, for every pound that comes in the business, it tells you how much pence is made after your cost of delivery. So in the first example, the construction business was basically 14 and a bit percent. So it was making 14p for every pound that it brought in before it started to pay its overheads. So that's where we were at. So in your business, you're going to figure that out. Now, if you've got access to more current data, even better. And what I mean by that is if you've got a Xero or a QuickBooks, something like that. And if you haven't got any software, your action point is to go and get yourself some accounting software. From us, you would have heard me talk about this before. I always recommend Xero as the most user-friendly one. That's what our clients tell us. And you can get yourself a great deal on that at HeelanAssociates.co.uk/Xero. They've got some crazy deal on at the moment, I think for 6 months, but it changes. So it depends when you're listening to this. But you can go there. Helps us, helps you. So go do that. So with your accounting software in hand, so hopefully you've got accounting software. If you haven't, obviously go get it sorted. Now with that in hand, what you're going to do is you're going to navigate to the profit and loss report. But the first thing you must do is update your bookkeeping. So make sure it's up to date, then go to reports, profit and loss, and bring it up. And you can change the date at the top to be a date that you are happy the bookkeeping's right. So maybe you've got a few transactions left, but pick the month before or something. You're just trying to get a range of data that you know solid. The big caveat to this is for the reasons we spoke about. If you have got stock or you know there's some data missing, you can't just use the sort of natural report that's going to come out of there because it's missing data. You can normally export them to a spreadsheet and play around with them. And I know this is now starting to sound a bit technical. And if you're really struggling with this is where you might need some support. But basically, even in a normal kind of business where you're happy and you haven't got any of these major time and adjustments, you're fine. But if you have got something like large stock or you take payments up front or you pay for things in advance and then get paid later and those things aren't in there, you've got to factor those in or at least know that the data's not going to be correct. If that is you, that's where you're probably going to pull out the accountant's copy of the last accounts, hopefully you've got, and you can use it from there. So all you're going to do is the same calculation, work out your gross profit, know where you are. Then set that goal as to how you'd like to improve. And if you want to make some confidence and get yourself some sector averages, you will not hear me say this very often. It's 2025 as we're recording this, but AI is a thing. So what you can do is you can go to like ChatGPT or wherever you get your AI kicks, and you can literally type in there and say, right, what I want to do is I want to act as my financial advisor. Please tell me the sector averages for my sector. So in this case, it would be the construction industry sector, and it will give it to you. Now, being AI, of course, it's going to give you a broad spectrum. And the nuance here is that sectors are quite, there's quite niches inside of sectors. So sometimes it'll say like professional service businesses are 70%, but I know loads of them that operate at 40%. So you have to take it with a pinch of salt, but that can start you on that journey and hopefully give you a bit of confidence. And oddly, if you do the construction industry one in the UK, you type UK construction industry businesses, you should get roughly the results I'm talking about from it. And we do see those. And again, they do depend on the subsection of construction industry, but there's a good example. So you can go into ChatGPT and ask it, basically. Outside of that, if you wanted more accurate results, you really need to speak to accountants who do this. Like, for example, we have a database that's got 20 odd years worth of data in it that other accountants have put in. So you know it's good sanitized data in the small business world. And because we work with so many clients in certain sectors, we know physically, I could pull up data here and I can see it in one summarized report of what our clients are doing in those sectors. So if you've got accountants with those kind of skills, that would also be it. And then you're going to set yourself a goal. So what I want you to do with the goal is decide, okay, what am I going to improve it by? Maybe I'm going to improve it by, say, a couple of %, but what I'm going to do is I'm going to do that over the next quarter. That's quite aggressive, actually, but you could do it, a couple of % over that quarter. But the key thing here is there's two decisions to make. One, when and how are you going to review it? You could argue that's two decisions, but I like to think of it as one. When and how are you going to review it? Put it in your diary, because otherwise it just won't happen. That's set. And then you've got to think about what we're going to do to improve. I've mentioned some of the overarching ways, but I don't know your business, So you've got to go away and think, can I raise price? Can I be more efficient? Can I reduce costs? And just brainstorm some ideas and just work on a couple of them and see how that dial moves. And that's what you're going to do. And it is a cool thing to do. Obviously, I'm biased. I'm going to say that because I get excited by spreadsheets, but it's cool to see the progress you're going to make. And hopefully you can make that big impact in your business, particularly if it's struggling. And please, if you do this and you have some success, hit me up. So info@heelandassociates.co.uk and let me know how you got on with this. And if you struggled, because we're always looking to make more content and help people do this. So if there's anything on this you've struggled to find or you're struggling with, or just drop me an email. And I'd be interested. We might even make a show out of it or do some Q&As or something like that on it, because this is big, this topic. But honestly, some of the work we do with clients regularly with this, you can see the details and the phenomenal change that's possible when people concentrate on this. The more frequently you can look at it and measure it and review it, the better. But we're all busy business owners, and I don't expect you to go from nothing to doing it every week. And actually, sometimes just getting the data is not even going to really be possible every week anyway, but monthly and quarterly is a good thing. I think if you set a quarterly goal, you probably want to track it monthly. That's where we see the most power. So there you go. So really good success. And of course, for the client, it changed their life, really. They had an amazing time, went on a lot of holidays. And as I said, we had to change up the difference in strategy. I suppose the different problem we were then helping them with. So, and I hope for you that you get the same thing. So hopefully you found value in today's show. If you have, please do make sure to subscribe via your favourite app so you don't miss an episode. If you find us, I know most of you find us on Spotify, but if you're on Spotify, YouTube, Apple, wherever you find us, please do just drop us a review if you can. It helps our visibility. Even better if you get the opportunity to put a few comments on there. For more business insight and tax tips, be sure to connect with me and my great team across all social media channels, including, of course, TikTok, LinkedIn, Instagram, YouTube, Facebook, Twitter, pretty much everywhere. We're everywhere. And you can also sign up to our 2-weekly HeelanHub Herald, which is an email direct to your inbox with business and tax tips. And you can do that by going to HeelanAssociates.co.uk and just scrolling around long enough, and you'll be able to enter your details. It'll pop up in a few scrolls. And that's it. Now, and a reminder again, if you want to pick up Xero at a cheap rate, HeelanAssociates.co.uk/Xero. If you want to get in touch about the podcast, as I said, email info@HeelanAssociates.co.uk and they all get read. That's it. Have a profitable and tax-efficient week, and I'll see you in the next one.